Hello. What's going on, everybody? Welcome to Now Stock Trades. Okay, guys. So, I was not going to make this video. I usually keep these napkin level analysis kind of internal, but I kind of went a little bit deep on this analysis. So I said, this will obviously benefit the YouTube community, but also the people that are inside, because I kind of wrote in shorthand. So I'm going to be. I did some deep analysis regarding clove, and I think so we're just going to go through all of this, and we're just going to start from the beginning. This is part of the research edge. Again, it's included lifetime access. Just kind of what I wanted to talk through. Here's my recording from yesterday regarding free cash flow, and this is kind of putting it in action, but using facts. But actually, I want to start here too, because I think this will be great. First off, how are you guys doing? B-Rob's upset, right? Stop complaining, right? At 142, I'm not happy, so I can imagine others aren't happy either. I believe in it, but just saying. Al, I'm often confused about the timeline of the intrinsic value calculation, given the x-axis is always going to 10 years. What time frame are you usually expect? So, okay, so good question. Yeah, you can say, by the way, I like your little cat there. Is that your cat? Here, I'm gonna take a little screenshot so we can blow it up. It's like this one here. Look at that kitty, dude. Look at that kitty. Oh my God, look at that kitty, dude. Oh, she's so cute. Oh man, sorry about that. I didn't want to put your cat on blast, right? Oh man. Okay. Let me see. Where are we here? Yeah. Okay. Oh, that's my boy. I love it. So freaking cute. Oh my God, dude. Okay. All right. So, yeah, let's open up this whole thing here. Let's open up this guy. Okay. So, he telling me, right? Let's open up Clove for a sec. And I'm going to comment over to B-Rob, but also I just want to take some time to really talk about your question. So an intrinsic value calculation, it goes back to what Warren Buffett says. It's not saying that the stock price is going to be $10 in the future. Sorry, it's not going to see. I'm saying $10 in substitution of saying 10 years. What it's doing is it's not saying, oh, this is the price target in 10 years. You could kind of look at it that way, but what it's saying is we've taken the free cash flow from 10 years from now, and we're discounting back at what would the company be worth today, right? Given that the market is forward looking, like what is the value today? Because, when you think of it this way, when you buy a business, like let's say you're buying like an ice cream business, and let's say they have no debt, which is Clover, right? They have no debt. And for this example, since Clover is about to become profitable soon, let's just say this ice cream is profitable. And let's say this ice cream makes you, $1 million, $1 million every year, right? Well, let's make it simple. Let's say this ice cream makes you $10,000 every year, right? And if I was going to sell the business, you think I would accept someone paying me $5,000? That's stupid. Like, let the business run and I make 10 grand, right? You think I'm going to explain, you think I'm going to sell it for 15,000 or 20,000? Not really. I just do 2 years, maybe 3 to 4 years. I might sell 30, 40, $50,000. Like, okay, well, I can get out 4 or 5 years. That's pretty good. It's 4 years of work I'm saving. You see what I'm trying to say? So that's kind of what this intrinsic is all about, right? So I hope that was helpful. We can go deeper on it. My recommendation is we have over, 10 to 20, 30 pages describing what intrinsic value is. My recommendation is clicking on Introduction to Intrinsic Value, Understanding Intrinsic Value. Read these, right? Obviously read all this, and we're going to have even more lecture, right? More stuff, right? Again, so you can understand and take you from zero to hero, right? Now, going back to what B-Rob, I was going to say B-Rob was saying, I ate garlic today. And when you eat garlic and you got that little aftertaste, hey, I have that right now. I can't even talk. I'm saying that garlic is strong. You know what I mean? Can you guys smell it? Sorry about that. I mean, God, garlic breath, huh? All right. Sorry for the distraction. Okay, so B-Rob, I understand your thoughts on Clove, right? A lot of folks on Reddit, on Robinhood have been selling on these down days. But what I want to do is just kind of focus in on this graph here, right? Look at net income. First, let's just look at free cash flow. Let's just clean up the data. Okay. So the stock became public in 2020. We thought it was going to flip from negative to positive, and then all of a sudden it just went very negative, right? Then it became less negative, and then it became less negative, and then it became now positive, right? Now, obviously, a couple things happened. We can put book value and we could remove. So you can see the book value has dropped. And now it's slowly starting to recover. So you see like this thing, right? And the big thing is also revenue. Revenue dropped heavily, right? And it's slowly starting to increase. And now it's going to go back to being growth on the growth side of things. But the point that I'm saying is, Clover just hit free cash flow positivity. You got to give it time, right? You can't just, you can't yell at a plant and say, "Why aren't you growing?" Right? You just can't do that, right? You just can't look at a seed and like hatch or an egg, whatever. You gotta let nature take its course, right? Because if you look at Clover, they just became free cash flow positive in 2024. I mean, you see the AI summary here, right? So what happened, right? You already know what happened. I mean, look, right? So, I mean, this 2024, it turned positive. The stock is up, like all the way from the bottom here. Stock's up 460%. I mean, Jesus, right? Up 653 on that recent high, right? So the point is, in a year out, it's almost up like 4 bags right there, right? And if you go here all the way down to this low here, it is up 4 bags. It's up 469. You know what I mean? So, it's just it takes time, right? They just had free cash flow positive, and I feel like spending any more time on this would just kind of take away from this analysis because I got to get going, right? So, I hope that makes sense. Free cash flow is king, and you can see they just flipped positive. Now you can argue and say, well, what about net income? Well, I mean, look at net income. Let's just graph that. It's becoming smaller and smaller and smaller and smaller. I mean, last time their net income now is better than they were in 2020, right? So you can see how it's about to flip. The question is when, right? And we're going to answer that in this video based off of analyst estimates again, which is part of our, stock terminal, which normally you would have to get access to a Bloomberg terminal to get. We have this chatter. Okay, let me see here. What's up? Caught you on my work break. Let's go. How do you think I found the video? I love it. Yes, it takes time. Absolutely, right? So it just takes time, right? And you can see how the fundamental people always say, I do fundamental analysis. I mean, you find a freaking YouTube channel that shows you this much fundamental analysis. We're really getting down to the core fundamentals here, right? And this thing is about to become profitable, right? So, all right. So now let's go and let's activate quantum charts and let's activate the price target software. So we'll activate these things, okay? We'll go ahead and activate them, right? They are activated, right? My little robot voice. Big thing here is based on, so now I'm going to go down in kind of descending order. So based on this M2 money supply, Bitcoin, it looks like there might be a bottoming out. So usually if you don't know, the money supply is usually 10 weeks ahead of Bitcoin. So I would say, if we were to look at it, I think Bitcoin is in its bottoming process. And, why are we talking about Bitcoin? Well, I think Bitcoin is now become a prognostic indicator of the stock market. I mean, it's just kind of weird, isn't it? It's become prognostic, and I like it because I like to look at Dogecoin and even Bitcoin on Saturday because the market's closed, and I want to see like if it's up and going up. I'm like, oh, we're so gonna have a strong week, right? So I look at those things, right? Another thing I want to talk about is tomorrow is Liberation Day, right? God, dude, it sounds so freaking corny. Liberation Day, right? So, Donald Trump really wants the stock market to go up. So I think there's going to be a Trump. We're going to see this Trump come on to effect here, right? So we're going to go ahead and look at this, and we're going to see this. Let me see. I have a little quick email. Let me read real quick. All right. So there it is. So we talked about that now. So I do think we're going to be bottoming out in the next 10 weeks. Let's see. The company's PR is terrible. People are getting frustrated with it, and IR never responds to anyone. Why is that? Are they concerned about potential? Well, here's the thing. I don't know how much you have Peter taking pictures every day. I mean, that's a lot of communication, I would say. I think as an investor, this is all this is all the communication I need, right? At the end of the day, this is all the communication I need, right? They're doing their job, right? And again, I know that's probably not what you want to hear. I understand, but and I know it's enough. I know this is enough. This is enough communication, because if you go to quantum charts and go ahead and just kind of make that full screen and go to Clove and ultimately look at institutional ownership, kind of the big toots. First off, you're starting to see that I decided to go thin. My group doesn't like it thick, the lines. So yeah, sorry. we're still on that, right? I like it thick, but they're right, because if you get a lot of data in the quarterly, if it's too thick, then it's just, you can't really see through it. So it makes sense. So Q1 here, it's starting to upload. So we're going to start seeing data points for Q1. So that's going to be cool. So that our Al Stock Trades premium terminal is going to be looking out for it. It's listening to the data. But you could see, for the first time ever, we've crossed this red line, meaning that we have broken a trend. And now 193 institutional owners are pretty much holding the stock, which, if you look at, the past, since 2021, it even beats 2021, right? So I think the stock price is going to go up back to these levels soon. And if you look at the total invested, I mean, you could see it here too. I mean, we got $292 million. It'll be interesting, because this broke out. It'll be interesting to see kind of where we are. I assume it will be higher, but again, we don't want to speculate until the data comes. So there's that. And if you score it, it's going to say 5-4. And the reason why it's doing that is because we have this new Q1, it skews the data down. So I would say, whenever you get the Q1 without the data, I would avoid looking at this metric, or just say N+1. So add a 1 to this to make it a 6-3. It's just doing an event listener right now, right? So we can go ahead and do that. I can fix it. I'll be fixing it later, but it doesn't really change anything. We already know where you can look at the data and self-extrapolate. And soon this feature will have and be part of our generative AI feature regarding generate intelligence. And folks, we had a lot of people sign up for the lifetime. Again, this is not open up to YouTube crowd. It's for people that are in lifetime access. Strong work. We got a lot of emails regarding coupon codes. We've given them all. We got a lot of signups. I'm very excited. A lot of interest in this, and I'm very excited that we are able to bring this to you, and more updates to come in the future, right? But it's definitely pretty cool just to have something generate for you to read, so you can get on with more analysis. So in terms of PR and whatnot, I mean, PR is more for retail investors. And to be quite honest with you guys, I mean, if you want to be a retail investor, go ahead. But usually retail investors don't make money, right? So I would say learn how to be like institutions. And what institutions do is they look at this material. They don't really look at what the company has to say. I don't give a crap what the company says, right? I care about the numbers, right? That's ultimately what it is, right? The numbers don't lie, right? Companies lie, numbers don't lie. I'm not saying that the company lies. I'm just saying I care about this. Why do I care about this? It's not because I'm an asshole. It's because that's what Wall Street cares about. right? And Wall Street makes money. So, I mean, you got to choose. What do you want to do? You want to make money, or you want to obsess about things that don't really matter, right? Company PR and all that doesn't really matter right now, right? Right now, they need to flip to net income and free cash flow. Once they're profitable, everyone is going to want to talk to them, right? And then you're going to start seeing them on Yahoo. You're going to see them on CNBC. You're going to see them on all these places, right? It's just right now they're just in that phase, okay? All right. I mean, for the God's sakes, look at Newsmax, right? This stock will trade above its intrinsic value. Uh, let's see here. Yeah, I don't know about Trump. We'll see what happens tomorrow. Israel just announced they dropped all tariffs against U.S. India has mentioned possibility of doing the same. So if that's a big deal if that happens, right? So and and then offset, the risk of a recession versus, so obviously Trump doesn't want a recession because then the amount of money he's going to save on tariffs is going to be equate to the recession loss. So, usually this is available when institutions publish it. Institutions haven't published it. So as soon as the big toots publish it by law, we'll get it. So it's pretty much in there, like when they ever hit send, and then we'll capture it, right? So it updates pretty quickly. Saving up for lifetime access. No, yeah, I'm very excited to have you. As you can see, the product is really well. And you can see, I mean, we've been in business for quite some time. So that we're not going anywhere. I mean, I get it in the beginning. It's like, well, I mean, I don't know is this really lifetime? I get it, right? But no, it is. Everything that you see here is all lifetime. The only thing that's an add-on is a generative AI. But I mean, all this is all included, and then you're going to get upgrades from all this. All these will get better. So ultimately, it would be really great to have you. And it's just we want people that are lifelong learners. We want people that are hungry. We want people that work hard, right? Because at the end of the day, you're going to be part of this group that has over $44.5 million of net worth. That with again, mind you, with a 30% response rate, right? So I bet you we have like 50, 60, 70 million dollars in here. There's a lot of quiet wealth here. There's a lot of quiet wealth, right? Let me turn up the AC because I'm cold as hell, dude. Hold on. Jesus freaking Christ. It's like no freaking middle ground here. It's either you're hot or you're cold. The AC just doesn't like it's just either it's too hot or it's too damn cold, dude. Anywho, I don't know. I'm having one of those days. Maybe I'm having some type of hot flash or something. I don't know. I took some nice, and maybe that's what it is. Okay, so yeah, sorry about that. I'm just complaining here on this live. Okay, yeah. So about lifetime. What was I going to say? I honestly lost my train of thought because of the stupid weather. Is it's really cold. I'm Loud Wealth. For lifetime membership, a firm is great with decent APR and installment payments up to 36 months in case that up. Yeah. So, and the cool part is what people are doing. And again, this is not financial advice. What people are doing is like, they do a firm, and rather than pay it all off, they can do a firm, pay it in installments. And yeah, there's interest on that, but the amount of money they're making off of the bigger chunk of the money, or Clover, or any stock, for example, in terms of the wheel strategy, doing covered calls, cash secured puts, they're making anywhere around 3 to maybe 10% per month, right? And so it compounds. So that's how they're taking that. Whatever that is, that helps pay off the mastering. And a lot of people have joined. They've been able to make more, like 100x than what the mastering cost. So yeah, so I'm very excited. People's interest in it. Yeah. So about the quiet wealth in here. I get it now. I'm Loud Wealth, right? No, so there's a lot of quiet wealth here. I have a friend of mine who has like 450,000 shares, right? And I have another one who has around 200,000, and they didn't fill out the survey. I mean, they like, there was a survey, because they're busy out there. They're busy. So there's a lot of folks that didn't fill out the survey. So I do think we have more than $44.5 million in here. So again, getting access to people that are just smart, people that it's just really nice. I just got a public service announcement here on my phone. I don't know if you hear it. There's been a motor vehicle crash. God, hopefully they're safe. It's on the I-10. Jesus. Okay, so now that we went in and talked about this, now let's go ahead and let's talk about the price here. So, okay, so this is some napkin math. So I'm just going to read it and explain because, it's just easier, right? So I said Q1 to Q3 2024, it was around 11.5% of revenue going to free cash flow, right? So if you look at the free cash flow from Q1, Q2, Q3 of 2024, we can pull it up here, kind of use it as a little bi-direction here, right? You could see here it was Q1 was 25.49, 44.36, 49.59. And if you were to add these, it's around, 11.5%. But all of a sudden we got this downward negative 86 million, partially through ACO, right? But partially not, right? And that ultimately brought it down to 55.9 if you count the 80, right? So that's what we did. We said, if we take the halfway point between 11.5% of revenue and then 5.9% to estimate future free cash flow and divide by 2, we can say, you know what, how about this? 8.7% of the revenue will go to free cash flow, right? So in the long run, if we take 8.7% of the 2025 revenue of 1.85 billion, you would get around 160.95 million of estimated free cash flow. So if we go ahead and type this into the intrinsic value, I'm not going to do it. I'm not going to replicate it because the numbers are here. There's no point of, putting this in. It's stupid and waste time. So we could. So when we did that, I did a base 1 of 20% growth, base 2 of 25%, and a bullish of 35%. I don't think Clover is going to grow 35% for the next 5-10 years. It might. Again, I'm being quite conservative, given that Alignment Healthcare has been growing like that, right? Like Alignment Healthcare has not been growing 35%. It's been growing around 50%, right? So I know I'm being quite conservative and a little hard on Clover, right? I know I'm being a little hard, but I don't care. I'd rather be conservative than be an idiot, right? And stuck holding the bag, right? So that's kind of what I'm doing right now, right? So if you do the base of 20% with the estimated free cash flow of 160.95, and again, yes, this is for 2025, but wait a minute, we could get it lower because remember there's an issue with growth, right? What happens if this new growth offsets the free cash flow, right? Just like the ACO payment, right? Well, fine, screw this year. Let's assume in the next couple of years, if Clover has $1.5 billion of revenue, they will eventually get to $160.95 million of estimated free cash flow. So again, I don't care when this happens. I just need to know the direction, right? Like, it's like laying a brick as perfectly as a brick can be laid. If you're going to do something like, for example, go to the gym, if you go to the gym for a couple days and expect to have a six pack, you're delusional. Okay. You're right. So it's going to take time. So all I need to know though, is if I'm in the right path. Remember that dog on a boat that's on I always talk about, right? That's kind of what I'm looking at, right? I want to know, am I going down the right path? Because if I'm going down to hell, I need to change course because I'm going to lose, right? So ultimately, this is where we're headed. That's what I believe. That's what my assumptions are. So we're going to go ahead and do the intrinsics, right? So from a base 1 case, if they grow 20%, we already know they're going to grow 37%, but let's just say 20% for the next 10 years, right? Then the stock will have no problem going anywhere between $10 to $14 with a bear case of 7 and a recession of 4. So you automatically know just from this stock is undervalued, and it is undervalued. Why do you think the big toots are buying, right? Well, why do you think they're buying what I showed you? All right. Now base 2, 25%. Yeah, look, recession case 5, we're not in a recession, and it's still a 49% increase from today's value. A bear case of 10, I'm not going to say 82 cents. You can read it. I'm not going to waste breath right now. You guys can read it, right? Because we can get to the video faster. A bear case of 10, a base case of 14, and a bull case of $21, right? And this is obviously the very bullish version, right? Again, this does not include SaaS. This does not, before someone says this does not include SaaS, okay? So here's then for the bullish recession of 9, a bear case of 20, a base case of 28, which is kind of where it was before on its peak, and and a bull case of $42, right? Which is a 10x. I do think we're going to get to this, but right now, if I had to, let's read my thought process so you can see kind of what I'm thinking. Let me zoom in so we can read. All right, yeah, here. So these will be the price targets above using the software we have in the mastering, right? So, so I would say 25% would be my best bet. I think, too little, no. Too much, no. I would say I would do just right here. So now I raise a problem. Only problem is, what about Q4 2025 FCF? That is the question. Will it be positive or negative? Well, the reason why I'm asking that question, well, because if you look at here, it was negative for 2025. And frankly, we have the ACO payment, but ACO is only around $39 to $40 million. What about the other $40 million? Where did that come into effect? Okay. And will counterpart assist and offset this? If it is, we're going to go to the freaking moon, guys. Okay. But before we even get too excited, let's read. I do not know, I said, right? However, assuming we get past it, what I'm basically saying, screw 2025. I'm talking about the long run, the road, the highway, right? Are we on the highway to hell, that song? Or are we on a different highway, right? So if it is, that's a good song, right? If it is this year or next, whatever, I do believe I will see these prices in the next 3 years. So you might ask these specific ones. So I know that in the next 3 years, I'm going to see $10, I'm going to see $14, and I'm going to see $21. I know in the next 3 years, I'm going to see this. I'm going to see these prices, right? The only time, here's the asterisk. The only time if I don't see these prices is simple, right? Let me explain. You might ask, well, when, Al, when? Okay, if this becomes negative like this, if we go back to this, then we're going to hell, right? So if this becomes negative, we're going to go to hell, which is why it's important to check every quarter, which is why this data is important, which is why I've been telling you for the past many years, you got to have this data, because if you don't have this data, you're freaking screwed. And you think retail investors know this? Of course not. That's why they lose. The other way that this price target may not go, yeah, I know. I like what you're thinking there. Hell is warm. I got to read the rest of the comments here. The other thing is, what happens if the net income flips down even more negative like this? Okay, we're going to hell, right? I'll see you at the tents. Get your freaking tent. Let's go, right? We're going to live in the tents together. That's the community we built. I'm just kidding, right? So, right? So, but again, I'm right? Do you think it's going to happen? I don't think so, right? But again, it's something to look out for, right? You have to have an analysis, right? So, okay, right? Get out the tents, guys. That's it. Bring your family master. Bring your family. Get them old tents. We can sit together and, right? Okay, so we should honestly do a camping trip. I mean, really get out of the wilderness. You know what I mean? Knowing me, I'll have a Starlink and I'll do a live there. Jesus freaking Christ. Okay, so all right, so back to, guys, you guys know me, right? So I do think in 5 years, we will get bullish 35%, meaning I'm telling you, I do believe that we're going to get these prices, right? Sing Kumbaya together, right? Sing Kumbaya, right? And hopefully Toy can be there, Toy Boy, right? Okay, so I do think 5 years will happen. So here's another thing. Look at the revenue. The revenue for the year 2029 is around $3 billion. In fact, it's a little over $3 billion, right? I say $3 billion. So this is based on Wall Street's thinking. If they think that they are personally, I think they are undervaluing it. I think that Clover I think they're growing them at around 20%, I think, or 8, 15, 20%. I do think they are, undervaluing them. It's kind of, I don't think it's right. I do think they're kind of in a growth phase now because what happens if they get to 4.5 stars? A lot can happen in 4 years, right? What happens if they drop to 3.5? I don't think that's going to happen, given that they're experts now and they have a good reputation. I would say, I think they're going to make more than $3 billion in 2029. But again, it's good to get a good baseline and make a video about what analysts think, and we can just kind of see how their progression is. Because I can tell you right now, a year ago, they did not have Clover growing this much, right? So don't think like analysts are some smart cookies, right? They just updated this, okay? They're right. So you guys know. I don't have to tell you about analysts, right? So, all right. So now it's going up to $3 billion. Okay. So now let's break this down. So if we use a growth rate of 0%, that means if we do intrinsic value and we do a growth rate of 0%, and we multiply 3 billion multiplied by whatever 8.7%. If we take a growth rate of 0%, I just want to know if Clover is a $3 billion revenue company and it stops growing, it does not have any more growth, what would it be its worth? I want to know. What I'm trying to say is I want to know its freaking book value, right? That's what I'm trying to say. The book value would be anywhere between $2, $3, $4, and $5 bull case. Most likely because it will be profitable, it'll be a bull case of 5, because usually the discount rate will be equivalent to the WACC, not a higher discount rate, which is usually used for venture capitalists. We'll explain that in the mastering course so you understand what that means, right? Okay, so with that, that's kind of the baseline. So what that tells me is that I am, as of right now, Clover's price is still at book value levels in 2029's book value. Does that make sense? Right? Again, it's a different way of looking at it. We'll explain it later. But if it makes sense, good. If it doesn't, ask a question, please. You have the chat live. This is a live. Okay. All right. Let me see here. Okay, which is funny because this shows we are so undervalued, which is why I'm trying to do. And shout out to Dr. Shroom here, right? So I used FCF 261 because I took 3 billion times 8.7%. Estimated CFC. Let me edit that. FCF. Sorry. A little dyslexic, huh? All right. Where I got the 8.7% is I got it from this calculation. You see how I'm building up on the thesis? I'm building, right? All right. So now that I did that, now let's go ahead and do this. So I think 25% is a fair growth rate. So what would be the price by 2029 if Clover grows at 25% using an estimated free cash flow at 261? So you could see the price of Clover will be anywhere between $17 to $34. And I think it's going to be, since it's profitable, I think it'll be $34, 23 to 34. So you could see, right? You could see the numbers here, right? It's all a numbers game, guys. This is exactly what Wall Street's doing. These are what the hedgies are doing. I'm showing you what the hedgies are doing. And I know people are upset. Yes, 2 hedge funds bought lifetime access. They bought it at an institutional price of $25,000 each. Even they're priced out. They're like, fuck, I don't want to get, excuse my language, but they don't want to, because ultimately the 15 to 20K is going to ultimately be the normal price for a lifetime. So they don't want to be priced out, because ultimately then it'll be 50, 60,000, right? Given the capabilities that we're going to do once this thing gets lifted. It's still remarkably, I know it's crazy. Remarkably, we're still in beta access. We're still building it out. And what do you expect? I'm trying to build something real here, right? You think I'm going to, I'm not other YouTubers where I'm going to put a bunch of bullshit and expect, this is going to change your life. No. This has taken me 5 years to build. I mean, and you can see already the information that we put, we pretty much went ahead, right? So again, I can't say who it is, but it's not Goldman Sachs, right? It's not them. But the thing here, guys, is I know it's upsetting that the hedge funds came in, but let that be a sign of like a nod from Wall Street, right? Let it be a nod from Wall Street, like, hey, you know what we're doing is right. What we're teaching is correct, right? So this is good. I like to see this. In fact, one of the hedge funds, very nice. He's trying to help me put this in high schools. He agrees. I'm very happy. I was shocked that he agrees, and I was like, wow. I'm to be honest with you, I didn't think that you guys would care, right? So that's really cool, right? And imagine this can go to your kids, right? So that's what I'm trying to do. Again, it's a tough fleet because they want your kids poor, and they want them to work for the big man. They don't want them to be investors, but I'm trying to change that. All right. So not deviating away from the mission here. Let's go back. So anywhere from 23 to 34, that's what I said in the videos. Here is what I said here. Right. So, and again, I said this is without SAS. So let's see total return from 61%. That's 5,542%. Not bad. The only time this will change is if Clover can grow more than 25%. And of course, SAS. If they grow 35%, even ALHC growth, I'm just going to do 35%. Screw the 50%. Let's do 35%. Then you can start seeing, a stock price of a bear case of $33, a bull case of 46, and a base case of 46, and a bull case of 69, right? So you could start to see where this can go. Okay. But let's go back by 2029. 2029. I like 25%. It's more conservative, anywhere between $17 to $34, right? But historically, 23 to 34. So then now I went ahead and I broke it down, and I said this is interesting. I said that if you look at Clover Health estimates, annual estimates, which let me show you where you can find. So Wall Street people talk to each other. Okay, we have access to it, right? We have access to what they say. Okay, all you got to do is you got to go to analyst estimates for Clove, and you click on this. Actually, I'm sorry. Let's go to net income. You go to net income, you click on this, and you can see that in 2028, not a lot of analysts are seeing here, but in 2028, they're expecting it to grow 85.7 million. So, I think all these will be adjusted. I think we may get to profitability by 2027 or even 2026. We're currently in 2025, right? But I think let's use their bearish analysis and let's use their number. I do think I think these numbers are even better than what I'm saying now. But that's good. What would you rather me to do? Would you rather me to feed you bullshit or something conservative? I personally like something conservative, right? Because I don't like bullshit, right? So let's use their values, which is conservative, which I like conservative. Why not? We'll use their values and let's reverse engineer this. So they have Clove net income at positive in 2028. I don't think this is right, but we can follow the math. So Clove this year has a net income of negative 43.01 million. How do we know that? Again, we go to net income here. Again, it's all part of the data. And we go here and it's right there. Right there. See, I'm not lying to you, right? It's right there, right? You see negative 200 million. You see how it's gotten a lot better, right? You see how it's gotten a lot smaller? You can see it, right? You see in these bars, they're less negative. It's not rocket science, okay? Right? Okay, so then now let's go ahead and say, what is the difference from 2028 to 2024, the end of 2024? What is the rate of increase? So the rate of increase percent is 299.3%, right? Increase, right? So what does that mean? It means that the net income increased by 3x from 2024. So if we were to apply the same 3x increase, then we should apply it to the free cash flow. So there's two different levels of free cash flow. There's the free cash flow that they went ahead and said, which is here, which is 33.29 million. But remember, this free cash flow includes the payment to ACO, right? And if we add 33 plus 47, which is the payment for ACO, oh my God, 33 plus 47, that's around 80. And did what's his name? Did Peter talk about this? Let me show you, just so we can have a very let me see. Wait, let me see. You could search the channel, and you can search the user. I think it's DOG, dog on a boat. Okay, and I think he posted it. I love the due diligence, man. Keep it up. You're doing intrinsic values. You're contributing to the community. That's the people that we like to have lifetime access, right? All right, here it is. So he posted this, and I like this. He said, "This is Peter on Q4 2024." Let's set. As a reminder, this is the final payment related to discontinued business. He's talking about ACO, and we expect no future impacts to our financials. Cash flow used in operating activities from continuing operation for the fourth quarter was 47 million. I think he's saying discontinued, right? And was impacted, it misspelled, it discontinued, right? Was impacted by various working capital dynamics, as well as continued normalization of our IBNR. I want to know about IBNR. I want to know what's going to happen, right? Which continued to decrease in the fourth quarter by approximately 11 million quarter over quarter, which is good. From about third quarter into 2024. Bridging our full year cash flow from operating activities is 82 million. So what he's basically telling you is that ACO payment dropped him down to around 33 million, right? Right? Remember? The ACO payment dropped him down to 33 million, which is right here. But what he's saying is that was just a one-time payment. And I agree, it is a one-time payment. So I would rather, if I do my analysis, I would rather do the 80 million. I'm not even doing 82 million. I'm going to do 80 million, okay? So I said, if you take the two FCFs, 33.29 and the 80, let's see what we get. 3X would get you 99.87, but I personally like the 80 because that's from the continued operations. And why are you going to include ACO payment degradation for the next 4 years. That's stupid. That's insane. That's not being conservative. That's being dumb, right? So we could go ahead and we can use 80, right? And then all we got to do now is we just 3x'd it. Because the net income was negative 43 million in 2024, and they're saying that the net income will be improved to 85.7 million, they being the analysts, then we have a 3x increase from 2024's net income to 2028's net averaged income of the analysts, right? On the high side, right? So if we take that, it's a 3x increase. And we already know these are usually undervaluing the company, right? So if we do that analysis and we see this, then if we take 80 and multiply it by 3, it would be 240. So that would be the free cash flow. So if you go back, didn't we say the free cash flow is estimated around 261? So this goes back to our analysis, which shows me that we're on the right track. Remember I told you about the dog on a boat and all this crap? This tells me that now we're on the same page, okay? Right? So, and again, my analysis was for 260 in 2029. This is for 240 for 2028. So it's only off $20 million, and that's all for a year. So it shows you how conservative my analysis is, right? All right. So there it is. So now is it here? The facts that they think that income will improve by 2.99x, aka 3x by 2028. You can apply the same FCF. The math falls in line. I'll make a video so people can follow me. So anytime between 2025 and 2029, I'm confident that we will see a base case of $21, a bull case of $31. But we have to remain net income positive and free cash flow positive. If we go ahead and drift down, let me graph you here. These numbers need to be above the 0. If they go back to being below the 0, then everything I said in this video will not come true, right? But I think they are in an inflection point, right? So with that said, if this happens, I will see you in Vegas. That's pretty much the conclusion, right? All right, so let me go ahead and let's go through these comments real quick. If we didn't have the facts and the numbers for the business, I couldn't hold the stock just going off price movement. So the info is vital in making intelligent investment decisions. Absolutely. I mean, at the end of the day, and this is what Warren Buffett's trying to teach, and a lot of people, oh my God, let me give you some gossip, okay? We all, they say men don't like gossip. We do. Okay, so let me give you some gossip girl talk, okay? So, all right, or gossip boy talk, right? So, all right, listen. A lot of retail investors don't understand this, and even if you try to explain it to them, they just kind of brush it off. Ignorance is really bliss, but it's not just, you would think retail investors are there's something wrong with them, right? No. They're just normal human beings, right? Let me explain to you, right? It's not because you're dumb. I'll explain why. It's because society made you think you're smart, right? Made you think you're some type of genius, right? And I'll explain to you kind of what it is. So in regards to this business and having the numbers, Warren Buffett said this all the time. When you buy a company, you're not buying the stock. You're not buying the stock. What is a stock? You go to a freaking American. You go most developed nation of the world, right? You go to America and you go to a citizen and you say, hey, what's a share? What's a stock? They're going to say, I don't know. They're going to bullshit you, or they're going to say, I don't know what that is. I don't do stocks, right? Right. I don't. Then if they say, I know what a stock is, it's part of Wall Street. Like, then what's a share? What is it? And they won't tell you. A share is a little piece, part of a business. Ladies and gentlemen, when you buy a freaking stock, a share, you are buying a piece of the business. And if you're buying a piece of the business, then you have to put the whole business together. Why do we think when we do an intrinsic value calculation, we do shares outstanding? We take our analysis and we plug in all the shares together and we say, and then we divide by the number of shares. We look at we look at the whole business's net worth, and then we divide them by the number of shares to get what each share should cost. And if the stock price is trading lower than what this thing says, then obviously that makes me happy. That tells me it's undervalued. And you've seen this play out. You've seen it with Palantir. Palantir was $6. I was saying, no, it's worth more. And now you see it. Okay. But again, you'll see it again with Clover. And then a lot of folks are like, holy shit, this is correct. Right. And there's going to be some people that are still going to say, oh, this person got lucky. At that point, we're pretty much done on YouTube. At that point, we've done it. We've given the best we can. And, for folks that want to catch us, we'll be in our lifetime access. Because again, I'm going to have a family. I'm not really going to have time, right? So then now let's talk about gossip, guys. Oh my God, guys, you're not going to believe this. Okay, so you see, the problem with medical school is they pump these they pump these students with so much just um like, because I'm in medical school, I'm a genius. Because I'm in medical school, I am X, Y, and Z. Right. And I get it. There is some form of aptitude and some form of intelligence that needs to happen in medical school. But literally, I was talking to a medical student, right? And I was trying to talk to them about this. This is recent. I was talking to them about Wall Street, and they're telling me, no, I don't think it has to do anything with the numbers. I don't think it doesn't. From my experience, what experience? What experience do you have? You literally came from undergrad. What experience do you have to talk about? From your experience, you don't think the numbers? Like, I look at them and I'm just like, holy shit. Now, let's extrapolate this, because remember, guys. Let me explain to you. Remember, I've seen this, and I've seen a lot of medical students say this. It's not just, but this is, they just said it again. I'm like, well, I got to bring this up to my group. They literally said this, okay? And let me explain to you why this is important. The fact of the matter is, this person is an educated person, finished their undergrad, right? Scored very great to get into medical school, a U.S. medical school, particularly a U.S. MD school, right? Right. There's a lot of stupid things in medicine that are archaic and just just kind of MD and all this other crap that I don't really understand. But again, all goes back to this old culture of medicine. But they're in medical school, so there is some form of intelligence. But even then, they still make a stupid comment like this. In my experience, I don't think a stock goes up because of the fundamentals. I don't think those numbers mean anything. I don't think they mean anything at all. They're saying that, I don't think the stock market is a safe bet. I think it's a gamble, and I don't think wealthy people invest in the stock market. I think it's all for show. This is literally the comments that I hear, and I'm like, what in the world? So what does that tell you? Is it a lack of intelligence? No, it's not a lack of intelligence. I think retail investors are smart. I really do. I think they're smart. I think it's a lack of transferable skill, a lack of being able to transfer some skill you have into another area and be able to, kind of like a Renaissance person, break things down into first principles. Because I tell you, if these people didn't go to medical school, they wouldn't know crap about medicine, which makes sense, right? They would probably say uneducated things about medicine. But unfortunately, this tells you the state at where we are. We've become so specialized that we are idiots and can't think on our feet outside of the training that we are in. And the sad part is we don't even have the mental aptitude to recognize what we know versus what we don't know, which is why you see a lot of doctors are terrible business people, because they think they know, and they think that they can just kind of walk into a place and act like they can get it because they're doctors, when in reality, no. And people like us on Wall Street, we take advantage of that, right? That's why we take advantage of retail investors, right? And I'm speaking to you guys all as lifetime access members, because now you all have a gift. You have a gift of data. And that's what B-Rob is hitting on. Imagine all the new investors, all the new minted doctors coming to the market. They're not going to know any of this. You all will have an edge over them. And guess what's happened? Every 2 years, there's going to be a correction. Every 18 months, there'll be a correction. Every 3 years, there'll be a bear. 3 to 4 years, there'll be a bear market. Every 5 to 10 years, there'll be a recession. And guess what? We, as lifetime access members, we are going to take advantage of this, because these people will buy at peaks and they will sell at lows, and we will be there. We will be there waiting for them, because they think they're smart. They think they're geniuses in this field, because that's what society has told them. But it's okay. We can use their ego as their worst enemy and take advantage of their ego, because they will sell, because they said, well, because they're going to really think they know more. And that's how we're going to win. I mean, how do you think we've made all this money so far? Someone out there sold Clover at 60 cents. and we bought that. Someone bought Clover at $5, $10, and they sold it to us at 60 cents. They pretty much basically gave us their money. It was literally a direct deposit to our account. Now, I know for the people that are listening to this that have sold, I'm sorry, that may seem hurtful, right? But take it as a learning lesson, because my point is this is an educational platform, okay? And the point that I'm trying to send to your temporal lobes so you can process them into your hippocampus and put them into your long-term memory is that Wall Street does not care about you. They will leave you at the end of the freaking road. They will take your house. They will take your children's college tuition. They don't care about you. Okay? All right. And then you have us retail investors. We're trying to make a living. I can't change the system. The system doesn't care about my feelings. All I can do is adapt. And that's exactly what this is all about. It is about the game of adaptation. Whoever can adapt the fastest will make the most money. And whoever does not, they will be left in the side of the road. That is Wall Street. That is what this game is all about. It is a nasty game, but if you use math and if you have a group of people that are very smart, you will become successful. Okay? You will become, there's a lot of people out there that are very smart, but they don't have transferable skills. And their ego actually makes them stupid. It's almost, think of it like when you look at the weather, 30-degree weather can feel colder than 10-degree weather. You might look at me like this is crazy. Or how about this? Negative 20-degree weather can feel better than 10-degree weather if there's winds. The winds brings down the chill factor by a lot. Think of it this way. Someone's intelligence can be degraded very fast through ego. Ego is such a elixir of death. It is a poison. And if you have an ego, the stock market will, one, humble you, and two, and it humbles a lot of physicians I've seen, right? And two, it's and the sad part is, physicians end up, let's say, oh, it's a scam, and they leave. And that's a way for them to not acknowledge their own failure, rather than saying, oh, I messed up. I need to figure out, obviously there's something wrong. No, they're like, it's a scam. It doesn't work. And rich people don't invest in this. And that's completely wrong. Okay. But it's okay. They're going to leave and they're not going to invest in the stock market again. But don't worry. There's going to be new doctors that have the same ego disease. And there's going to be new people that are in engineering, new people that are just coming out of high school. There's going to be people that are coming on in the stock market, and they're going to make some ego-driven mistakes, and they're going to think that because they, watch CNBC or they took their amazing Harvard degree in finance, they're going to come to where the big boys are, which is where we are, and they're going to realize that there's a difference playing for your high school basketball team and playing for the NBA. Right? And what I'm trying to show you and what I'm trying to train you is I'm training you how to win in the NBA. Right? That's exactly what we're doing here. So, and you realize it's pretty simple. Anywho, that's my spiel. And I'm happy, B-Rob, that you see the value in the data, because there is a lot of value. And, B-Rob has made some killer-ass trades. Absolutely. Right? March was a good month for premiums. Absolutely. Many doctors don't know how to manage money. My attorney told me docs have one of the highest bankruptcies rate. And that's why I'm hitting them hard right now. And I believe these habits are built in the medical school process. They put you in this box and they drain the creative juices out of you, right? And unfortunately, it leads them to become prey for financial advisors. And they become prey. And it's unfortunate. It really is unfortunate, because financial literacy is not taught in medicine. It really isn't. And honestly, that leaves you to become a worse off doctor, because then you would make all these risks. And I just don't think it's good, right? That's why there's a lot of addictive use in medicine. The suicide rate is high in medicine. There's a lot of issues in medicine. But I think good financial literacy would really help, right? So we did good on 4 strikes. I follow smart people because, how you build a great, and that's the team that we're building. We're building a great team. And it really is like taking candy from a baby. Right now, we take the coal buyer's money. Exactly. Because they're going to think, exactly. You're starting to play the game, B-Rob. When rich people become rich, they become experts on everything. Right. So it's hard to become experts. You have to know your weaknesses. Like for me, if I'm weak at an area, I will know where to go. Right. I will know where to go. And that's a recipe for success. If there's a weakness, you really, it's just, you really have to know what you know and know what you don't know. I mean, that's really what it is. And unfortunately, ego messes that up, right? My doctor is fatter than me, and then what does that tell you about the state of medicine, right? Again, they go through residency. They go through, again, the healthcare system is broken. Okay. And it's a very sad process, right? So it really is. And most likely I'm fatter than you, right? So what does that tell you, right? The whole system, I mean, just look at why do you think we got the chef, right? I mean, right, you see where I'm going, right? This, right? Look at the hospital food. It's terrible. They don't care. There is this pico de gallo. I said, "Oh, did you make this? Did you cut it?" And the cafeteria lady laughed at me. She said, "Ha ha ha! Are you joking? I don't have that time." And I was like, in my head, I was like, "This person doesn't care about your health. This person doesn't care." My dog is going to have his own personal chef and fitness trainer. That is so cute. You better make TikToks of that, right? I would watch it. The point here is, guys, is you really got to surround yourself with winners. You can't surround yourself with losers, right? Because then you'll be the next loser, right? So, yeah, I know that you're talking about Ozempic, right? We don't know the long-term effects of it. It's scary, So the point is we're on the right track, and I'm waiting for Q1, right? And then everything we talked about today has to do nothing with SaaS. All right, ladies and gentlemen, I love you all. I will see you on the next one.